Drainage. Drainage, Eli, you boy. Drain dry. I'm so sorry. Here, if you have a milkshake, and I have a milkshake, and I have a straw, there it is, a straw. That's a straw, you see? You watching? And my straw reaches across the room and starts drinking your milkshake. I drink your milkshake. I drink it up. Did you think your song and dance and your superstition would help you, Eli? I am the third revelation. I am who the Lord has chosen. Hello, everybody, and welcome. Um, I thought it would be really helpful. Is audio good anyway? It looks like it. Yeah. It should be good. Is it quiet? I guess somebody will tell me. Or I can just check right here. All right, we're good. So I thought it would be appropriate, since we're going into a market slowdown and economic downturn. I thought it would be important to give my 2 cents, because I have an entire elaborate macroeconomic thesis that I think will start to see play out, specifically the part that is deflationary, or at least disinflationary, and a lot of people are going to be very surprised. So I'll see if anybody pours in. But I made up this slideshow here, and I think we got a really good show coming here, even if it's dry today, even if it's just a couple people. So, hey JNs, hey Ardent Party, hey Vin Ghoul, glad to see you, Jay. So a big part of understanding why our economy has been in a persistent, I don't know what you would call it. What I would call it is a recession. It's been in a recession since 2008. It's been lackluster. Is because of dollar-denominated debt, and everything in the world revolves around that issue of increasing dollar-denominated debt and the lack of GDP growth. But I guess we'll start off. People have been asking me about doing a Eurodollar video, about talking about what the Eurodollar even is, what the Eurodollar system, Eurodollar crisis is, and why it's the most important thing to watch if you're going to try and understand where the global economy is going, where any economy is actually going, because everything is intertwined. It's almost like one, there's no economy that's independent, that's on its own. Everyone relies on one another. There's no independent. Nobody makes it out on the other end of this looking good. Okay, except countries that are just total third world. Yeah. Anyway, so I had a lot of ideas for a title for this video. It's like I couldn't really think of anything that was interesting, other than the fact that our recession is going to be deflationary. Inflation will start to come down, and having non-productive debt is the stupidest thing you could do ever right now, and probably for the rest of our lives. So without further ado, I don't know how to use these panels here. Boom. We'll start off with the first definition here, because we need to define our terms. Oh my gosh, I'm so bad at this. I'll just deal. Okay, there we go. We have to define our terms. We have to understand where the dollar-denominated debt originates. So specifically, what I mean when I say Eurodollars. So what are Eurodollars? Yes, Hunger. Unger. I'm so glad to see you, my friend. Glad you're back in the U.S. I saw your tweet. It's pretty funny. Okay, so What are Eurodollars? So from Investopedia, which is my favorite website when it comes to defining things, and they have a pretty clear Austrian bias, which is fine, but whatever. The term Eurodollar refers to the U.S. dollar-denominated deposits at foreign banks or at the overseas branches of American banks. Because they are held outside the U.S., Eurodollars are not subject to regulation by the Federal Reserve Board, remember that, including reserve requirements. Dollar-denominated deposits not subject to U.S. banking regulations were originally held almost exclusively in Europe, hence the name Eurodollar. Now they are also widely held in branches located in the Bahamas and Cayman Islands. So in plain English, dollars outside the regulatory reach of the U.S. government or the Fed or federal agencies. Eurodollar loans follow the LIBOR rate, which is the London Interbank offering rate, so that's redundant what I just did there. But if I just said LIBOR, no one would know what the hell I'm talking about. But the LIBOR rate, so LIBOR, which are in heavier and heavier demand as foreign nations all need dollars, whether it be the governments, whether it be corporations, whether it be individuals and their pension funds. They need dollars, yet don't have enough due to long-term trend of economic slowdown since the late 90s. Very glad. I'm so happy to see you, Focron. Glad you got your milkshake. There'll be a lot of milkshake conversation here today. So we understand what Eurodollars are, right, everybody? Eurodollars, one, it has nothing to do with the euro. That's why I hate the word so much. It should be called, and this would literally be perfect, it should be called the rogue dollars, right? That's what it should be called, rogue, right? It's gone rogue. It's outside of the U.S. It's not regulated. You can't count it, and you can lend it out to whoever you want. A bank who has $1 billion, there's no way it can, through quantitative tightening, be sucked back into the system. Or actually, quantitative tightening. That's when they take back the central bank reserves. So there's no way for the Fed. One, in my opinion, the Fed doesn't do anything, but let alone there's no way that they control the massive amounts of U.S. dollar denominated debt around the world. That can't be serviced because, as you will see, GDPs have been stagnant since 2008. But we'll get to that. So, in short, rogue dollars, yes, would make better sense. Are Eurodollars unique that, or are there America euros? No, see, that's the thing. It has nothing to do with the euro. The euro word, the euro preface, whatever you would call that, is extraordinarily misleading. It has nothing to do with euros. It is U.S. dollars that are outside the reach of the Federal Reserve, of the SEC, out of reach of their ability to count it. That's why there's so much debt that keeps getting created ever since, we'll talk about it, the Marshall Plan, that they can't grab a hold of. America euros would make no sense because nobody in America wants fucking euros. So unless you're like Forex trading, which is stupid, don't do that. All right, boom. So that's the best one. I like this one. Okay. So understanding dollar-denominated debt. So the Marshall Plan, this is from Investopedia, where I talk. This is a little thing about the Marshall Plan. So, oh yeah, hello hunger. Speaking of re-entering the U.S., I'm currently working feverishly as bureaucracy ever moves on getting my paperwork in place for a move stateside. Oh man, Godspeed, my friend. You got a lot of choices there if you come here. At least you'll be able to afford a house. That's for sure. Canada, it literally, I think, has the most expensive housing market, if not beaten out by Australia. Anyway, yes. Sorry, I drink a lot of caffeine, so pardon me if I'm very like stiff today. The Marshall Plan was a U.S. sponsored program that was implemented following the end of World War II. It was intended to aid European countries that had been destroyed as a result of the war, and it was laid out by the U.S. Secretary of State George Marshall during an address at Harvard University in 1947. The plan was authorized by Congress as the European Recovery Program. So essentially, Europe was completely demolished, as was Japan, and we also had a lot of grants and really low interest rate loans to Japan. A lot of time it's just grants, like here's money. And so what happens is when everybody needs money, they don't have an agreed upon currency. Well, there's the U.S. They're handing it out for free, and we love the U.S. because we know their currency isn't going to get demolished. We can trust them. They're the government that prints it is ostensibly on the gold standard. And it's not actually. It has a gold window, which they closed in 71, which is why everyone is like, when anyone says like we got off the gold standard on 71, no, we didn't. No, we didn't. We got off the gold standard in 1932 or 33 when FDR got us off the gold standard, right? The dollar was no longer pegged to gold after that. In 71 or 72, was it 73, when Nixon closed the gold window, that was not going off the gold standard or any of that. It was France was trading in their dollars for gold, and we were like, hey, knock it off, guy. We want to keep our gold. And so we're like, well, now it's just officially you can't trade dollars for gold. So, but we'll finish this slide. Boom. So programs like this were not only what reinvigorated the growth of this new global economic paradigm, but the unintentional invention of a new currency and financial paradigm that operated under one money, the US dollar, Eurodollars. Nations didn't trust one another's legitimacy, nor especially their currencies. And here comes America, the mightiest and most trustworthy nation, with the highest standard of living, swooping in to save everyone. Soon, countries like Italy already started having troubles economically, but instead of wanting gold, they wanted dollars, because that's what they were in debt to their creditors. So the dollar milkshake. So essentially, all right. So before we get to that, to sew things up into a nice little, so we understand where we're at here, is the dollar is the global world reserve currency. It's the world reserve currency because there was no other alternative at the time. You needed a fiat currency, and it was literally patchwork. It was, hey, we need money. It's essentially it. We need to rebuild and we need money. And it was very, very convenient because we already had a global, like there was already that happening before World War II, right? There was already that happening before World War I. There was already globalism forming, right? League of Nations, even before that. There was a very clear, slow build up. It was that we were moving towards this global economy. Now, World War II, screw that for a sec, and then you go back to like, well, we want to continue what we were just doing. Here's a currency we can use that everybody will accept. Schelling point, very basic economics, okay? Very basic game theory, actually, which is very like similar concepts. Game theory is economic. Weren't dollars convertible to gold at $35 an ounce under Bretton Woods? Yes, I'm not wrong. It ended in 73. Whenever Nixon closed the gold window, that was the end of it. I forget when Bretton Woods was. I haven't gotten into gold since I was a gold bug in 2020. The Bretton Woods system was like the convertible gold system, right? Yeah, 44. Yeah. So from 44 or whatever to 72, 73. When did they close the gold window? Gold window closed August 15th, 1971. So there we go. So in 71. So yes. Ardent Party moved to Texas, bro. It's awesome down here. You can join in on the Californian fun. So essentially we have, all right, so we have a system that is, it needs money. They got it. But here's the issue. When you start throwing money around the world, one, America is always going to have a trade deficit because there's more demand for, it has an infinite, so picture this. And this is an economic concept that goes back to the beginning of economics, Hume era, right? Cantillon era, Adam Smith era, which is like Well, he was much later, but you get me. Classical economics, which is that if a nation has a bunch of gold and they have a lack of things in comparison to that gold, they will start spending more so they can get things, right? And so that drives prices up on things until you have less gold and prices come down. Well, we have this system where we have an infinite amount of money, and so we can always we're the source of money. It's not infinite, but in theory it's infinite, right? And so America will always have a trade deficit. And then you also have the issue of because everybody needs dollars, and so you can get whatever you want. America could literally get whatever it want until, what was it, the Plaza Accord? The DXY ran up to like 120, 130, which is the dollar exchange, the trade weighted dollar. That's like if you don't know what the DXY is, it's basically like the strength of the dollar. That's what you look at when you want to see how strong the dollar is, right? 100 is like the average. And it went up to like 120, 130 under Reagan. And they had to do the Plaza Accord where they literally printed a bunch of money and artificially brought down the value of the dollar so that nations could get dollars, essentially. Which is why there's talk amongst econ guys like, will they do this again? Because it's even worse now. Probably not. And they can't. But so another thing that you have when you have this system is everybody around the world has to use this currency. And sure, they use euros sometimes. Sure, they use yen sometimes. It doesn't change the fact that when a corporation, like, and people, they think like, well, what if they just, it's like, dude, you realize how like fucking fast business is? Like, I got to buy this now. I need this so I can make this. How do I get it? Oh, you need dollars? Here you go. Like, no one's getting political, okay? It has been the accepted currency for decades. That's why one of the many reasons it wouldn't change, because it is the Schelling point for all companies all around the world, all governments. If a government wants to buy something from another government, it's always been in dollars. So that's where we're at. That's the goal. That's the world reserve current. That the dollar is the world reserve currency. It makes sense why it is. It's a good thing that it's been the world reserve currency rather than gold or whatever communist shit Europe or Russia would come up with. So boom. The issue, what did we face? Well, the issue that any complex system faces when it can't add to its own complexity, diminishing returns. So, what's the next slide? Oh, got to do this. So my macroeconomic prediction. So I think I shit talk the DR more. Put plainly, there isn't enough dollars to warrant the inflationary crash that many people theorize, especially people on the dissident right. So I guess I'll explain that real quick. Why isn't inflation going to be sustained? Why is it transitory? Because there isn't the way to bring up prices and the way to bring up demand is to print money. So you need to hand money directly to people, helicopter money. That's how you bring up demand. What is it? Short-term, what aggregate demand in the short term, right? And you can bring it up and get people spending money. You will have to sustain that to perpetuate inflation. Where's your issue, though? Well, there's a lot of issues with that. Because it's also psychological. Like, we all know about hyperinflation. So if that started happening, people would short the dollar in numerous different ways, right? Everybody just be buying gold. Oh, goodbye dollar. Like, there's no way that the dollar makes it out on the other end. Well, excuse me, not the dollar, but the entire world falling apart now that it doesn't have a Schelling point. It'll go back to gold, which is not good. You don't have a global economy without an electronic currency that could be printed. There has to be some kind of state at the very pinnacle of everything that can print the currency, okay? But that's the issue. I'll get full screen here. That's the issue. Even if you did print money, you know what would happen? People would pay off their debt because there's so much fucking debt. So here's the issue. If you hand someone an extra $500 a month, well, the average American, well, they're paying $300 a month in student loans. So it's essentially you're just giving someone a free college, basically. That's what you're doing. But you're not, and you're keeping that institution that they get the loan from, you're keeping that afloat for some reason. Like why not just make college free? You see where I'm getting at? The money won't go to raising prices because the money is going into destroying money. That's the issue that you're facing. There isn't any aspect of this economy that will be stimulated other than fucking McDonald's or something. Okay? So most people have too much debt. Most people, it's embarrassing how bad their how much debt they have. Like non-productive debt. Like if you have a car note, I'm sorry, don't. Like go buy a used car, right? Like you could buy something cash, do it. Because non-productive debt is cancer in a world where debt has less and less value added to the world. So inflation can't happen because there isn't money literally being printed into the system for that to happen. If they did that, the dollar would crash, and so goes the entire global economy. And I'm sorry, but I think Jay Powell knows about Weimar Germany, okay? I think Janet Yellen, I think she's a little bit read up on Weimar Germany, okay? I don't think they're fucking stupid. Like, this is the issue with so many people, like dissident right and libertarians especially. They like think that, oh, they're just a bunch of dumbasses who don't know what done about through history with the hyperinflations and stuff. Like, yeah, they do. They're PhDs. I'm guarantee you they've read a lot about it. Which is why they're like fucking around saying they're going to make a government, a CBDC, a central bank digital currency, central bank digital currency, which it's like there's numerous issues with that that I've spoken about before. But yeah, so we'll talk about this further. Okay. Like what's your point? I'm not totally sure about Biden, though. Okay. Yeah, Biden is going to single-handedly marry the Treasury and the central bank. Yeah. Biden, he has so much power. All right. The only time okay, yeah. So there's a very sincerely and commonly held belief that there is someone secretly manipulating money, but central banks do not have the level of power that people perceive they do, right? Money is a market-driven phenomenon. They're the ones that drive it. There's organic demand of dollars due to a shit ton of debt in the world, especially non-productive debt that doesn't create value. You don't need a government to be. There's no man behind the scenes fucking like they literally tried to do this for 10 years during the 2010s. You got low inflation and they kept saying we're going to bring up inflation, bring up housing prices, and it didn't happen the entire 2010s. It took a giant meme-demic for shit to be out of whack, and now it's falling back to earth. Maybe I'll talk about property later. Dude, property prices in Texas are plummeting. It's great. I love it. The only time they will is when they marry the Fed and the Treasury and start printing money Weimar style. But that won't happen, partly because they'd have to be professionally retarded to make that mistake only 100 years later. But that would clearly only benefit U.S. debtors and foreign debtors. The government wouldn't win. Why? Because the entire global economy functions on U.S. debt. It is the primary form of collateral post-2008, and to purposely destroy the entire system to where no one can function except your enemies would be exceptionally stupid. But that's not the only issue with impeding inflation. The only issue that's impeding inflation. So, yeah. So look up Eurodollar futures. Okay, there's several billion dollars a day market. Trillions? Probably just billions. That's centered around dollar demand, like buying dollar, borrowing dollars and buying U.S. bonds and then Euro bonds. What are those? Well, those are U.S. bonds that are outside of the reach of the Fed and the Treasury and the SEC. But the real point I want to make is no one controls anything. The market, there is literally an invisible hand of the market. Sorry, yeah, it's just true. What was I going to elaborate on there too? Is yeah, if you print, during the 1970s, there were like the real way to make money back then was not starting a business. It wasn't being in the stock market because why? Because of inflation. You know what people did? They borrowed money. Why? Because it was cheap. Because when you have inflation, debt is cheap. You know what that means though, right? Inflation, look this up. I'm not lying. You can look it up. You have an internet connection. The U.S. Treasury, the 10-year Treasury in inflation. Look at it. The higher the yield goes, the higher inflation goes. So if the yield is not skyrocketing, that means inflation probably isn't going to last, much like in the early 1950s when there was a supply chain fuck that was a lot worse than the one we've been experiencing. And inflation shot up to like the highest it's ever been in U.S. history, like 20%, 20-something percent, worse than the 70s. And then it fell way back to earth after a couple years. Sorry. They aren't printing money. I'm sure. I mean, maybe back then they were. Maybe back then there were also people freaking out. I don't think people were economically autistic and astute enough to talk about that back then. But yeah, basically, you made money in real estate. You made money on getting cheap debt. So in the 70s, you made out like a bandit if you could get cheap debt because it would be inflated away. You'd get more and more dollars that would pay off your debt. That's how it. See, if you have to pay $1,000 on a mortgage, and that $1,000 is easier and easier to get because there's more money in the system, because that's what inflation is when there's a bunch of money coming into the system that you can spend versus the amount of goods and services. That means debt's cheap. Okay, so get debt. And that's what people did in the 70s and made a fuck ton of money. Yeah, go to Texas. Stay out of Florida. Florida sucks. So what is this? This is velocity of M2 money stock. So the reason I put this here is because look at it. This is the amount of money that exchanges hands before it is destroyed, right? Before it goes towards paying debt. What happened? What's going on here? It was going all the way up and all the way until 1997, and it literally has halved. And even after 2020, it's still low. Even when they supposedly printed all this money and people were spending like crazy because Americans are just fat and stupid. Like, no. You know what actually happened when they printed money and gave it to people? A lot of it went to savings accounts and paying off debt. That's what it did. That's why I really can't stand Austrians. They think that like they think the world, like they think the economy and money revolves purely around whatever Jay Powell says. They're literally Keynesians, but they hate Keynesianism. Like everything is about the central bank. They're so focused on it. It's like, dude, no, it doesn't do anything. Look, here it is. Nobody's spending money. Inflation's actually, we've had a disinflationary economy for 20 years. People have been spending less. This right here is not inflationary. This is people not spending money. This is people having $100,000 in student debt and not being able to fucking buy anything except ramen noodles. This is people also not having kids because they don't have shit to spend on. Right? Like I've been able to save a bunch of money. Why? Because I don't have kids or a girlfriend. All right. So so this is a little bit more wordy, right? I'm gonna have to explain this, but it is very important because when you understand this, it literally explains the entire issue itself. This is the money multiplier, which Does it say it there? If I'm not wrong, Adam Levinson. So I got this from Adam Levinson. Everybody follow him on Twitter because he understands the secular deflationary paradigm that we live in a lot better than most people. And so the money multiplier is, what was it? It's broad money. It's broad money and monetary base. I already know this. I don't need you, Adam. So what's broad money? So broad money is money in the system. Let's just make it that simple. What's monetary base? Monetary base is central bank reserves. So what are central bank reserves? Well, funny you should ask. The money that whenever you were on Twitter and you saw back during the disease, the sickness spreading time a couple years ago, remember on Twitter when there would be like headlines that said the Fed is buying $100 billion a day in U.S. Treasuries. Oh, they're printing money. Nope. Sorry. No, they weren't printing money. What they were doing was giving banks, commercial banks, central bank reserve in return for the treasuries, because what they're supposed to do is loan based off of those central bank reserves. Loan to you. Guess what they didn't do? Loan to you, because they don't want them, which is why reverse repo, which is where they can get those treasuries back overnight, every single night, right? That's why they were doing that, which I'll explain later. They don't want the central bank reserves because the banks aren't bullish about the U.S. economy. So you know what this tells you right here? This tells you that broad money since 1980 has been falling compared to monetary base. There's a bunch of central bank reserves, but there isn't bank deposits, as in banks loaning to you, as in money, your money at a bank. Look at that. I'm not lying. I didn't make this up. This is straight from the government. This is straight from the Fed themselves. I thought we were having inflation. The Fed wants inflation. The Austrians really want inflation because they all have gold and they all want cheap debt, and they're like super freaked out. They want to have see, the thing is libertarians want to have their crash so they can blame the government. Sorry, it doesn't work like that. Sorry, money isn't that you don't just see, they don't print money, okay? There isn't a printer and they're doing this and money's flying out. That isn't happening. Sorry. Okay. So, next one. So this is federal debt held by private investors as a percent of gross domestic product. So this is very self-explanatory. People are buying U.S. Treasuries because they don't want to buy corporate debt. Simple as that. They'd rather have the thing that literally cannot default, and if it did default, would destroy the entire global economy, so it literally can't. Like, I will explain to you, everybody is like, well, actually, U.S. debt could default. That's just a lie. It's like, no, it can't. It literally is built into the system that there can't be a no bid. The primary dealers are obliged to buy it. There will always be a buyer of the U.S. Treasury. Just like Japan is a buyer of its own its own JGBs, Japanese government bonds. Treasury and agency securities owned by banks. Why'd they buy so many? I thought the U.S. government was printing money and defaulting. Why are they more and more buying bonds rather than buying corporate bonds? Why are they doing that instead of buying stocks, bro? Why didn't they buy GameStop? Why aren't they buying gold stocks? This is out. So overnight reverse. Okay, so now we got into one of the best parts. Minoan, hello, my friend. The third world is still desperate for dollars. I saw it with my own eyes. Dollar is still king for now. Yes, for now. I agree. That's the thing. I do agree with, I'll agree with everybody. The dollar is not, the dollar exists purely in the paradigm that exists now. Once this shit falls apart, the dollar, there's no reason to have it. It's not going to. It's not going to be useful. Is deflation coming? If deflation is coming, then should I keep money in the bank? Not financial advice, et cetera, et cetera. Yeah. Everything I'm saying is not financial advice, only my opinion. But my personal advice would be yes. Have dollars, save dollars, sell shit that you don't need. If you can start a business that well, actually, I know Hunger, you got a business. If you have a business or some kind of cash flow, something that's giving you cash flow persistently and it won't go away because there will always kind of be a market for it, and especially if you don't really have any debt, I would stick with that, because I don't think the U.S. economy is going to crash. Everybody's just going to be in bread lines. Nope. Sorry. The government will employ you. Like they'll employ like tradesmen and keep them employed, like building useless bridges before they let people go to bread lines. I'm sorry. Like it's a long way down. Long way down. It's going to suck, but it's a long way down, which is why I'm not like really bearish on the U.S. government. They're going to be around for a while. Like this is immanentizing the eschaton, or whatever. This is making it into like, oh shit, just around the corner, it's all going to fall apart. Like, nope, sorry. There's a lot of this could keep, like Japan has been in a Great Depression for 30 years. Like it's a long way down, dog. All right. So what is this? Let me drink. Shovel ready, dude. I remember that, dude. I don't know what our economy will look like in the next 10 years. I'm expecting big changes though. Yeah. It's going to be the 2010s, but worse. And then the 2030s will be the 2020s, but worse. That's kind of like my quick, stupid way of saying it. Like it's not going to be one event or a couple events or 5 events that lead to some kind of crazy shit happening. It's like you've had plenty of events, dog. Not you, Minoan, but like we've had plenty of events as a country to fall into civil war, and we haven't yet. Like, what do we need? Like, there's literally like black nationalists burning down cities. We're still driving to work. Like, that's the thing. Civil wars never look like how you think they do. Most of the time, it's just boring and your life sucks, and your chances of dying from homicide or like a terrorist bombing goes up from like 1% or like 0.01% now or whatever to like 1%. So you're stressed out. You probably die from a heart attack younger because you're stressed out. That's about it. Or, you prepared. All right. So so this is overnight reverse repo agreements, Treasury securities. Okay. So reverse repo, the reverse repo facility. These are treasuries, short-term treasuries, literally like overnight to 30 days. This one is specifically the overnight ones, so literally overnight. So what does that mean? Explain that to me. Well, you know what it is? It's like a bond or like a really short-term security, right? So if you go right now, you can go to treasurydirect.com and buy yourself some treasuries, buy yourself some U.S. debt. Go do it at your heart's desire. And the shortest term treasury that you can buy is the 1 month. Now, what they do is they have this facility at the Fed, among other facilities. This is like the most used one, where commercial banks that have an account with the Fed, so that's going to be the giant banks, right? JP Morgan Chase, Wells Fargo, Bank of America, Stanley, Morgan Stanley, they have accounts with the Fed. So they can go straight to the Fed. And what do? Well, they give them central bank reserves. Remember that shit that I was saying that banks don't want, that they get during quantitative easing, right? They take that and they buy treasuries, right? Because they don't want to loan to anybody, which they don't really need central bank reserves in the first place. That's just a way to centralize the system, which is what a central bank does. But it doesn't have to use. So central bank reserves, real quick, I'll basically explain it simple as like plain, like explain it to me like I'm 5. Central bank reserves are modern day gold, but only banks have access to it. They are the way that they are basically an accounting ledger that you create money off of, that banks create money off of by loaning to people like you and me. And in the good old days, what did we do? Anybody? Well, we made money off of, normally, gold, right? You'd have a 20 ounce, you'd have a ounce bar, you had gold, 1 ounce gold bar, and you'd be like, well, I'm going to keep this at this bank, but I want a certificate that says I own that gold, so I can travel across the country, give it to another bank that's either not associated with this bank or is. I got to pay a fee if they aren't, right? You know, we still do that these days if you use an ATM that isn't with your bank. And bada bing, you get your gold. Or you have a certificate that says, hey, I want to buy this amount of beer, but I don't have my gold with me. But here's a certificate signed by the bank, right? Has got a little seal, you know, everything. Check it out. And that's free banking. That's how money used to work. That's how money worked for several hundred years. China, I think, was the first country to actually have paper money. Anyway, quick little lesson. But essentially what's happening is central bank reserves are being traded in for treasuries. Why? Because banks want collateral. Well, why is collateral so important? Well, it's not only important, it's the reason the economy crashed in 2008. You see, I'll explain it. So I have this from a book called Central Banking 101 by Joseph Wong. Everybody should go read it. It's one of my favorite books, clearly. And he basically gives out this example of how the collateral market works and what it looks like. So a hedge fund may want to take out a 1-month loan from a primary dealer, collateralized, primary dealer, so a bank, collateralized by some treasury securities, treasuries. A primary dealer would make the 1-month repo loan, then source the money by borrowing from one of its investor clients using those same securities as collateral. However, the dealer will likely borrow on an overnight basis instead of matching the maturity of the two loans. Since the interest rate for the overnight loan is lower than the rate for the 1-month loan, the dealer will be able to earn the difference between interest it receives from the 1-month loan to the hedge fund and what it pays its investor client for an overnight loan. So, financial alchemy. You want to know how banks make money? You want to know why they get to have beautiful fountains at their headquarters and everybody who works for them is the smartest person in the world and they all have all the power. They could literally enlist paramilitary to take over the US government if they really wanted to. You know why they get all that money? Because of that. Financial alchemy. Stuff that basically just is essentially there's nothing happening, but billions of dollars are moving around and probably billions of dollars being created for that money to just go and create more billions of dollars via treasuries, via money that never, ever, ever, ever sees the real economy, ever. The banks just have it. So what this is them saying, well, I don't want dollars. I want to have my dollars yielding something, but I don't want to buy risky U.S. economy securities like corporate debt. So I'm going to go and get those treasuries overnight. And they want to have that just in case that they need it for some other deal. It's literally we have the most over-financialized system, and it requires collateral overnight so that it doesn't crash every night. And that's why it's been skyrocketing since early 2021 at this point. Holy shit. I've been watching this. I've literally been watching it since it was at the bottom there, right? You see that in 2021? I've been watching it ever since. So it's now like 2.2 billion or so. And that's basically 35% of the money at like banks in central bank reserve that they have just being put back into treasuries. So essentially money is not being created. The real money printers It's not the government. You know why? Because they don't give you money. They don't loan you money. It's commercial banks. They're the money printers, right? They're the ones who create the money. Like, this is how money gets in the real economy, through debt. And you know what debt does? It creates demand for dollars. So if you don't have dollars, but you have a bunch of debt, it's not good. Sorry. I grin a lot. I'm crazy. Velocity of M2 has crashed, and private investors and banks want to own more and more treasuries because private investment is simply too risky for them. And we'll get to this. I have charts, okay, guys? I have really good charts coming. Money is piled up in low interest-bearing treasuries that cannot default. And the more money that goes into the economy, it will primarily go towards paying off debt like it did during the stimulus checks. And when the Fed did QE here recently, banks simply didn't want central bank reserves to lend out as bank deposits. And every night have piled trillions of dollars into reverse repos, which act as very short-term bonds that they can get a small percentage return on while having the collateral that allows them to function. But why did this all start? Because 2008. Also, hunger. I'm probably gonna be buying a house at some point soon, so don't worry, man. I'm doing it. So, more examples. So this is mortgage-backed securities. This is when this. So back up here, baby. 2008, right? We had a thing called mortgage-backed securities. They still exist, okay? They're just not one of the primary. They're not the primary collateral that we were just talking about, used by our over-financialized banking system, because our banks don't trust each other. They're like, well, I saw Lehman Brothers and Bear Stearns completely collapse overnight because they had too many mortgage-backed securities that went sour. I only want to have mortgage-backed securities if it is backed by the Fed. So right now, if you can see, there's about $2 trillion worth of, is that right? Yeah, 2 trillion. Shit, dude, that's crazy. There's $2 trillion worth of mortgage-backed securities, as in mortgages, as in your mortgages. Here's the chart deck, and here's the slide deck. Yeah. That's a good show. I learned a lot from them, man. So in 2008, when that happened, the Fed had to come in and say, okay, well, I want to make sure that the system still functions and that everything doesn't fall apart, even though they should have done that by not letting Lehman Brothers and Bear Stearns collapse, but they didn't. So, and I know everybody's like, that's not libertarian of you. I know, because libertarianism is stupid. They should have saved them. We would probably all own houses right now and still have this cheap debt system. It would have collapsed at some point, but it would still exist. So the Fed, right? They basically say, well, okay, now we don't have private label mortgage-backed securities. If we do, it's higher interest and it's seldom used compared to agency mortgage-backed securities, which means mortgage-backed securities that have the check mark of the Fed saying, we will not let this go bad. If these people default on their mortgages, you'll still get your money. So you can get that, and it's a slightly higher interest rate than Treasuries. Right now, it's probably more. I would think it's probably a solid amount. If you want to buy those, do it, or don't do it. This isn't advice, because they can't go bad. Like literally, like they can't. They're as good as Treasuries, basically. So, like literally, like theoretically, they are as good as Treasuries. But what is this? So what is this fucking weird line? Explain it to me. Well, that's what it is. Since 2008, the Fed has been buying treasuries. Then they tried to sell them back in 2011. We had a mini recession then, and then it was flat. They bought them back up during the latter term of Obama's second term. It went flat over 2016 because, especially, Trump had brought in Jay Powell, and Jay Powell was quote unquote a hawk. He's like Volcker. And Volker's that's all a myth, but that's for another day. Volcker didn't save anything. The Fed has never done a thing in their history of existing. They've always failed at doing things properly as they should. Like they're a communist organization that doesn't know how to be communist properly. Anyway, they started selling mortgage-backed securities back into the economy, as you can see, from 2018 to 2020. And guess what? In 2018, we started going back into recession. In 2019, we had the repo market madness. And then boom, 2020 just so conveniently happened to have what it had, and they bought them all back. And now they're going back into quantitative tightening, and I can't wait. Because you know what just happened? Mortgage-backed securities went no bid. Nobody wanted to buy them. So have fun doing. I've talked about this before. I don't know where, but I've mentioned this before. Like when they start doing quantitative tightening, the banks are just gonna be like, no, sorry, we just don't want that. We want treasuries. We want treasuries. But mortgage-backed securities, nah, thanks, dog. You can keep that. Anyway. So in 2008, private label mortgage-backed securities and asset-backed securities went bust, and now banks don't trust each other to make private label securities. That is why they are buying up government debt, specifically U.S.-backed. Well, why is the dollar so important? It's the Schelling point, as we talked about previously. Every economy needs an agreed-upon money, and it would only make sense that when you have a war that destroys the world, World War II, it would naturally start using the currency of the only powerful, trustworthy nation left. It was patchwork like everything else is, but I think the DR really doesn't like recognizing that money cannot be controlled or manipulated in the way that they think it will be, because it goes against elite theory. It goes against their bread and butter, and that's the main issue. Many people want to believe there are levers you just pull to make shit happen, but sorry, you cannot control the many intricate autonomous mechanisms of an extremely complex financialized economy. If the Fed wants inflation, they will have to take some pretty drastic measures to get it. And if that means a central bank digital currency or helicopter money, then apparently they've gotten desperate enough to keep those housing prices up, which I don't think the Fed will let everything fall apart for boomer line go up. The FDIC. FDIC insured. What is the FDIC? Sorry, I'm retarded. Federal Deposit Insurance Corporation. So that's just I know what they do. So like if you have $250,000, good for you. It will be insured by this government-owned entity. Is it Fed-owned? Hey, FDR found it right after he destroyed the gold the gold standard. So it's one of two agencies that supply deposit insurance. It is a U.S. government corporation. Okay. Like the Bureau of Indian Affairs, Federal Communications Commission, Nuclear Regulatory Commission. Okay. So that is an interesting thing, real quick, is if you have $250K or less in money, in cash, that's fine. You can keep that in a bank, and no matter whatever happens, the bank literally has like a statement that says this person has $250,000 that is owed to them, right? But ostensibly, if you try to take all that out, they're going to be like, why are you taking all your money out, dog? You got to pay a fee. We got to report this to the government. We got to fucking, sacrifice your firstborn son, all that good stuff. But once you pass that $250K, that's when people start buying short-term U.S. debt. So if you have $1 million, take 750,000 of those, and if you don't know what the hell you want to do with that 750K, which you should, there's probably something that you would do with it that's fun and exciting and hopefully spiritually and financially useful. But if not, put it into 1 month to 3 month U.S. Treasuries, which are also known as T-bills. Anything under a year is a T-bill. 1 year to 10 years or 7 years is a note, and 10 to 30 years is a bond, if I remember all that correctly. So buy some bills because you can get a yield on it in the short term. It'll be returned back to your bank with that yield, right? So if you have $750K, and what is the U.S. 1 month bill yield? It's probably like, holy shit, it's 1.1%. So if you put $750,000 times 1%, you get $8,200 from that. All you got to do is wait a month. That's pretty badass. I wish I had $750K to put into T-bills to make $800K a month. Anyway, literally like the easiest thing. You just go to Treasury Direct, just buy it. Or you go to like Schwab or whatever. Everybody has an investment account these days. You could just go to one of those and be like, just buy TLT, or not TLT. You would want to buy an actual bond. Don't buy TLT. That doesn't follow interest rates. That follows the price of the bond, which are inversely correlated. Right. Everybody knows that. So the Fed had to buy up everything, and in doing so has sucked out liquidity from the market. And when they sell it back, well, you get no bid, like exactly what happened this month. Louis Barnes of Cherry Creek Mortgages, who has been a mortgage broker for 44 years. So that means he's been doing this since the inception of mortgage-backed securities. Witness MBSs go no bid for the first time. Why is that? Well, simply put, the market does not trust itself, right? There is not a market. This is actually really bad, okay? It literally means that banks are like, well, there's not even a market where people can pay their mortgages, so I don't want to own that shit, no matter what the Fed says. That's pretty bad. Jay, he always, Jay is my id. He always has good questions. Jay, just please, just say the question. Just give me your disagreement. It just racks my mind seeing your So why is that? So yeah, the market doesn't trust itself. Banks aren't bullish. Investors aren't bullish. All that got them bullish was lowering the barrier to entry for opening a stock investment account from $2,000 in your checking account to $0. And now that has soured, and the economy is back to being what it was pre-2020, complete shit. The actual money in this country returns to being bearish. The whole Fed pushing up rates stuff is really not helping either, but that itself is just a financial phantom. The FFR doesn't matter because, oh, okay, yeah, see, that's what I was thinking, actually, yeah. Is it a play for you? Oh, yeah, you actually have money. I would say, I'm right. The people that I follow are at least have 50 IQ points on me, and they understand this shit through and through. Again, everybody go Lacey Hunt, Jeff Snyder, Brent Johnson, Akuthan. He's got an Israeli name. Akuthan. Something Akuthan or Akuthan. Lakshman Akuthan. Joseph Wang is great to learn about any of this stuff, but like, dude, yeah. So if I'm right, which I literally, I don't know how I could be wrong. But if I am wrong, then it's like, okay, well, it's really easy what you need to do with your money. Get a bunch of debt, get a bunch of gold, right? Like that's the play to make. Inflation is really easy, okay? It's deflation where there's not money going into the real economy. Like people, like literally, it's the only way you make money on that is not having debt, having cash, and having some kind of cash flow that keeps you from not being homeless. So figure that out. Or just have a farm and make food for yourself, and then you don't have to worry about any of that shit, which is my play. But dreams, right? So banks aren't, yeah. So anyway, yeah. Well, so the FFR doesn't matter. So that's the federal funds rate. The federal funds rate is this. Well, okay. This is the reserve requirement. permanently zero, which means that those central bank reserves, there's no reason to own them, because it just is basically telling banks that they could just make money based off of nothing, I guess, and that they'll, like, essentially the financial system is so fucked that they're like, you don't need to have a certain amount of central bank reserves. The Fed said this, like, literally, they said it's going to be zero permanently, and not only that, we're discontinuing it because we're never going to raise it again. So that's crazy. That's actually too much for me to even talk about. But essentially, that kind of goes back to why banks are so compulsively buying treasuries. So, where were we at? So, marginal revenue product of debt. So this is literally my bread and butter. If nothing else convinces you, or everything else is too wordy and nonsense, and you're like, well, they're just going to print money no matter what, it's all going to go to hell in a handbasket. I bought my 50 tons of gold and I'm ready to run to the hills. Well, here's the one thing I think that might get you thinking. Get that noggin jogging, baby. So, most importantly, the MRPD, marginal revenue product of debt, is at an all-time low. As in, the value created from a unit of debt going all the way back to 1870 is at an all-time low. Look at this. Look at this. So you're telling me that there's so much debt in the system, right? All you got to do, look up average student debt payment, $300 a month. Imagine if they had to go back to paying that, which they kicked the can again. They don't have to start paying student debt until October. So it's been well over 2 years. Nonetheless, you want to tell me that there's going to be inflation when debt is basically lower than, like, the value of debt, the ability to gain value from getting debt is lower than it was at the trough of the Great Depression. This tells you that from total debt in dollars, GDP per dollar of debt in the US, right? That means for every dollar of debt made, only 23 cents of value is made. So what that means is the average person who works a shitty, specialized, over-financialized job that would not last in any kind of economy where you need to make stuff, they bye-bye. Yes, 1870 was very bad time. 1870s to the 1890s was an extremely shitty time in America, especially in the South. And people will say we experienced deflation throughout that century, and it's like, yeah, it's a lot of it is because we kept having bank panics, and essentially the latter like quarter of, like, 20 to 30 years after the Civil War ended was just a depression. Like, it would get bad and it would get good and it would get a little good and then fall back to shit. And then that's why we started actually making records, like unemployment rate and shit. Like, that's when that started coming out, was like, why is this happening? Let's go around America and start tallying what is going on. Guido Young. I don't know who that is. We need to take a policy or two from Guido Young. Jung. So if you have a bunch of money here, so here's the simple, this is the simplest thing to understand on why deflation is not only probable but imminent, or inevitable. Not imminent, right? We probably have another few months of inflation, and prices will come back to where they were at about the same price they have been for 10 to 15 years. Not just on assets, obviously, but on everything. Because people don't have money. Because people have a bunch of debt. And they don't have jobs that pay them a lot of money. Right? So you look at this. This means everybody has a shit ton of debt, right? What is... So if anybody could find the number of average household debt, let's do per capita, like per person, or I guess it's not per person, it's per household. Found that median debt per American family to be average debt stands 6,200. Oh, that's credit card debt. Jeez. So Q2 is about to be 0% GDP, right? 0% GDP. The average American has average American student loan debt is $32,000. The wage growth is stagnant. Global GDP per capita is stagnant. You know, what else do I have to bring up here? People are like, poor people are maxing out their credit cards. Most Americans don't even have, like, anybody under like the median income, which is like what? Median would be like 50K, right? Median salary US 41K. So median annual earnings 41K in 2024 workers age 15 and over with earnings in so whatever. So we'll just say 45 or 50K because you're gonna get all kinds of fucking numbers. And they have debt that continues to increase at a rate that they can't pay for. You have an economy that is bloated with infrastructure that needs to be maintained, right? We can't keep expanding this GDP. We can't keep expanding our economy, or else, just tack on another couple suburbs to the, sides of Houston. Not going to happen, which is one thing that's happening. Go look it up. Housing builders are selling like they're rocket selling at lower and lower prices. We're going to start seeing housing prices fall pretty drastically. The long and the short of it is the average American is way too indebted to be spending money. And their debt itself does not make them money. That's the issue. We have overused capital as a source of value production, as a what is it called, an economic factor of productivity or whatever, which it's like land, labor, capital, and entrepreneurship. I think that's the four that Lacey Hunt uses, who made this chart. So how does this look inflationary? Like, how does this look inflationary? So we're going to pay all that down and then go back to employing everybody, and then like we're just going to have a jubilee, and then everybody's going to go like produce a bunch of stuff that will create wealth, therefore driving up prices? Or is the government going to hand out a bunch of money, delete all of this debt, and then they're going to say spend this money or die? Is that what's going to happen? I don't think so. You know what I think is going to happen? We're going to look like Japan. That's what I think is going to happen. We're going to have, but worse, right? We don't have the same culture that can sustain the years and years of just torment, like spiritual torment that country went through. This country is just going to get more and more drab and shitty. So a lot of people who have a lot of student debt, they're not going to be able to spend. And the money printing that you think happened didn't really happen in the way you thought it did. And, I'm willing to eat my words in a year, but I'm pretty sure by next year it's like the issue is, and I'll get personal here, guys. My work is slowing down. Okay? I don't know about you, but I stayed employed through 2020, right? I've had the same job for over 3 years now. Good job, love it. And we're slowing down. We have like good clients, you know? It's just the economy right now. You know what else? People don't have money and they have a bunch of debt. That's why they're going to start selling their houses at lower prices, because they need money. Get ready for the DXY to go up to like 110, maybe more. Cut up your credit cards. I learned that from Dave Ramsey. No, Jubilee, I mean, that word is thrown around a lot in like econ spheres because it's like, well, what are they going to do? Jubilee? I've started to use it, but it is kind of funny. Like, yeah. Jubilee was actually a couple years ago, I think. Like, Jubilee. The Jubilee that happens every 49 years. So, debt is deflationary. People aren't getting money. The main crux. All right, so maybe I explain it here better. Doubt it. Wait, I just did there we go. So what's the main idea to gather? There's too much dollar-denominated debt in the world due to the phenomena like economic and Pareto efficiency and the MRPD, marginal revenue product of debt, being at an all-time low. There is a diminishing returns on debt. Due to the world being excessively indebted, to the point many major economies have, and we're going to get to that, major economies have a negative yielding bonds, which means, what does that mean? That means people literally, the economies in Europe, for instance, have been so stagnant, Japan as well, that investors buy their bonds because they would rather buy that than buy all these corporations that are basically like 10% owned by China, 10% owned by their government or whatever, and they're like barely hanging on by a thread. Like Europe is essentially like it's essentially like it's as bad as Japan, essentially. Like Western, Northern, Central Europe. Southern Europe is like it's not first world. It's med, bro. Med's always gonna be good. So the move towards government make work has increased the issues of there being too much to maintain, little ability to expand the economy beneficially, and regulations and government that inhibit growth. The excessive indebtedness is primarily dealt in dollars, and as debt continues to increase and people make as much or less money, people will buckle up and spend less, as has been shown since 1997. After 2008, the global financial system broke, disallowing liquidity to be dealt into an already overstretched global economy. Because of this, modernized economies with high dollar debt have faltered. Boom. European Union GDP since 2008, flat. Boom. Russia GDP since 2008, it was flat. It shot up in about 2013-14. It's fallen since. Boom. Japan. But GDP has been flat since 1993-4. The depression, the real estate scare started in 92, though, if I'm not wrong. So, as I made clear in my Tainter stream and other works, I'm not a fan of viewing the world through catastrophe-based through catastrophe-based events, a catastrophic lens. History is not simple and so two-dimensional. There has been a slowing global economy since at least 2008. Some can even argue we should have recognized it in 1992 with Japan, or in the 60s with flattening or falling MRPD, if we even had that data back then at our fingertips like we do now. Lacey Hunt puts it pretty succinctly. When you overuse a factor of economic productivity, you gain a boom at first, but then there develops diminishing returns. In my opinion, the beginning was with the Second Industrial Revolution, but for the sake of not being extremely complicated, we will say it really started with 2008. Why 2008? Whoops. That's when the financial system broke, plain and simple. The Fed refused to do what Keynesians are supposed to do and actually money print and restore faith in private label mortgage-backed securities and asset-backed securities. Obviously, this would have just prolonged the problem, as you can only get so much out of financial alchemy before it means nothing. But they let Lehman Brothers, Bear Stearns, and well over 200 other banks collapse in the course of a couple years. So what now? I don't know. Done. Well, I can give a good idea of what will happen. The continuation of the Obama-era stagnation with the bonus of a slowly shattering trust in geoeconomic relations and neoliberal trade agreements. Some nations will get super WEFE. Some will get super or WEFE. Some will get super ideological, nationalistic or communistic. But all around, there will be an inability, which actually I would say the U.S. will make it out on they'll have the greenest grass out of all the shitty situations. But all around, there will be an inability for governments and corporations to maintain consistent information sharing and control. Resource allocation will continue to falter, and the boomer containment epoch will come to an end. Civil unrest and continuous unpredictability becomes the norm. People will become poorer, and debts will not simply evaporate because of this. This might also mean that people won't care about debts and just not pay them. The financial system will break, but it will be more so because of John Michael Greer's explanation of increasing catabolism due to an inability to maintain complexity. There will probably be forms of feudalism, forms of extending debt repayments, but it will all be patchwork to cover for how little productivity there is in the economy to make up for all that debt. This is where deflation will become the likely scenario, as in the case of Japan, where there isn't more wealth being created from the amount of debt that there is. It's just stagnation. Maybe ours won't be like Japan's, but it will definitely liken to it over time. This will be due to little money, too much debt, and lessening demand for goods and services, much like the Great Depression. In deflationary, stagnatory scenarios, only the savers and skilled will win. Let's see. How much do you think the stock market will crash back to 2008, if not before? No. Also, Ouros, I sold equity at the top of the market start of the year, so have cash floating around. What's the risk with Treasury bonds? 0. Treasury month long. Oh yeah, go right ahead. T-bills. Yeah, do it. That if you want to carry your money in something that you know you will most certainly get a return on, throw it in T-bills. Now, if you're a fucking schizo, just take it all out of the bank and put it under your bed and buy a bunch of gold. But obviously, we don't speak in that frame because that's stupid. So don't do that. What I would say is invest in your fucking skills. Like, if all you know how to do is buy Bitcoin and sell at the top or whatever, well, go get some skills, dog. You don't live in good times. So I just bought some woodworking tools, actually. But I right now is the time, if you have money, to buy land. Good. It doesn't matter if you have a job. It matters if your job gives you useful skills. That's what I'm trying to get at. Sorry. That's what I meant, really. But I just know too many crypto bros who are absolutely useless in every degree, but they know how to trade crypto or they know how to trade stocks, right? Just absolutely useless in terms of their occupational talent. What? So yeah. We all have family members like that now. But what I would say to anybody at this point, what do we do? What do I do? Well, the world's ending. Well, I'm sorry I have to be the one to explain this to you, but create value. You're surrounded by a bunch of financialized a specialized economy of people who only know how to type on a laptop. Go learn how to make a chair, right? Go learn how, go fish. Go build a chicken coop out in the backyard, right? Go watch Greg Judy and learn how to farm, or learn how to ranch. Go learn permaculture, right? Learn how to be self-sustaining. Learn how to be someone that someone can count on. And even more to that point, start working with people in preparation for hard times, right? Once again, I'm going to say, I'll put it in the chat. Everybody go become a basket weaver, okay? All we do is make baskets. If I can somehow share the Discord, go join basket weavers and start building trust with other people who know shit is hitting the fan, and nothing looks good, and they don't want to live in the pause world, okay? Now is the time. If you have money and you're not dumb and you have a bunch of debt, what you need to do is go buy houses or properties that have more than an acre of land, an acre or more of land, reasonable away from the city, right? To where you can have a community, you have like your small town, you make friends with people there, you go to church. Like, this is what you need to plan for, unless you already have roots and you're good. Or if you have roots in that case, or you're where you want to be, then yeah, just start. You got your community. Just start becoming more of a useful person. Start being like Greg Judy, right? Start being that guy, that force of nature. Make a physical product or service, right? Like, that's it. Be useful. Get a skill. So that's my 2 cents about what do I do? What other financial black magic do I need to put my money into? You know what my answer is? This. Forget you. Right? It's like, dude, go be useful. Like, start a business that you don't start with debt, and you're able to get business with it. You're able to provide a service and resource to people in your community, right? So that normally, right now, I would say that means being a craftsman, like being someone who can take a log and turn it into a chair. You're taking zero or near, basically something that you could just, its value is as far as burning it to keep you warm. Now you can turn that into a chair. So, something I want to do is like build a cabin. I've been watching a lot of those videos. I'm like, dude, I know what it's like to work in the hot ass sun. And what do I need? Like a few $1,000s? Like, okay, I could, like, even if I bought land cash or like put a huge down payment for a conventional loan on a piece of land with a house on it or something, I could still build, like, I could still save money for a little bit of time. I got a side business now. I just got another customer, and I'm trying to make money so that I can make this dream come true. So I can be self-sustaining. Like, okay, it's literally like point A to point B. Like, okay, well, the economy is going to continue to be shit, and the world's global economy is collapsing in on itself, and people are crazy these days. What do I do? Like, oh, I got to spell that out for you, dog. Sorry, bye-bye. Like, people are pulling their hair out, not knowing what the fuck to do. It's like, dude, I don't know. Like, go read the Bible. Like, go get like your starting point. I say this as somebody who has just enough money to put it towards something useful, right? And I saved it. Yeah, build a moat. I don't have my glasses. I was gonna put my sunglasses on for that one. Or my hat. Dang it! I have like a good straw hat. Looks like a something a Sicilian would wear. But yeah, put yourself into useful endeavors. That's my number one piece of information. And then number 2 is buy land and start like making friends, because people are the only capital that matter. You're like, I hate what is it? Your net worth is your network. Your network is your net worth. And it literally right there financializes your relationships. Like, yeah, people are just there to make me money. It's like, no, people are the only thing that matter. Like, in your life, like, All that matters are your relationships and your friends, you know. But anyway, I think I sufficiently explained why we are on a deflationary downtrend. So if anybody wants to criticize me or ask a question, I am all ears, but I am not a financial advisor. My financial advice is stupid. What is that? I got a good quote for you. Oh my gosh, dude. This is like one of the most obvious quotes that Jesse Livermore has ever made. Oh my gosh. Oh my gosh. This is like the most annoying thing. Like this is one of the main quotes that people quote of Jesse Livermore, and I can't find it. Are you kidding me? Okay, so oh, I might have found it. Okay. Okay, no, that's not the quote. So basically the quote is if I buy a stock on Smith's tip, I have to sell on Smith's tip. If Smith is away for vacation, then I'm left in the dust trying to know when I need to sell or buy. So this is essentially this is the issue with listening to other people's gospel preaching on what to buy and what to do. I don't know why you think an economic collapse would impact safe office jobs more than crafts business reliant on the economic cycle. Because most office jobs are gay and stupid, and you don't need them. That's why. If you don't know how to do anything else, pick up knitting. You can always make money doing that. Yeah, knitting is good and very wholesome as well. I like knitting. I feel like woodworking is almost like a manly version of knitting, which is why I'm trying to do. I also want to build a cabin because that's a cool goal to have, and I want to make that happen. So, but yeah, it's it's a good thing to do. It's a good thing to know. I think people these days don't really work with their hands enough, and that's kind of why like all they know how to do is Excel spreadsheets. Like that's most people's jobs is sitting around. So like to go back to like your question here, or your statement, your confusion, okay, with oh, I don't know why you would think that some fat guy sitting around in an office designing some nonsense or doing an Excel spreadsheet, why he would lose his job and have worse job security than the guy who knows how to make things and can, like, even though shit has hit the fan, he can make a thing and be useful to other people and help people out and go do services. Like, what is the fat man child? And I do AC work at offices. I've seen these people. You can't tell me that these offices are full of useful people. It's like it's fat lesbians and like people who have like tails, like furry tail. That people have Star Wars toys at their desk. Okay, this is normal now. So you're telling me those people will be a-okay, and all the carpenters and AC guys are just they're fucked, man. And what you're saying is that they're not as like it's you can't compare it. Like, yeah, I can. Like the guy who works in an office building and then immediately goes home and um you know has not he plays video games, like that's his hobby. Like those people, yeah, they're not going to do well. Those people want to live in the pod. Like those are the people I'm referring to, which is most office workers. Do you expect the macro situation in the other provinces of the GAY to develop similarly, or do you anticipate some major divergence? Yeah, I'm gonna have to work my way up to chair or something because I'm not. I normally screw stuff up at the beginning a lot, so I'll probably screw a couple things up really hardcore. So I got to buy a lot of wood, but I'm gonna still do it. Oh, I got a speeding ticket, so I got to pay that. Yeah, just realized that it's probably gonna be like $200. My first speeding ticket, baby. It's pretty good. Like 23 first speeding ticket, and it was bullshit. I wasn't even like speeding for the sake of speeding. I was speeding to get in front of someone when the lane was closing, and there was a cop who knew that someone would do that there, so he could pull them over. And he was like, "Why didn't you slam on your brakes?" Because the guy was going the speed limit. I had to get in front of him. It really pissed me off, but whatever. That's life. That's life. That's the thing. There are so many expensive things that come around the corner all the time in life. It goes back to that one of the most important sayings that I learned from my buddy planetologist who I've had on the channel. The poor man pays twice. Yo, la nouvelle réaction in the house. But yeah, to answer your question, do I think everything will develop similarly? Yeah. So Europe and Japan are already there's so the issue is having a lack of money. So if they just say U.S. debt is stupid and we're just going to print money, then they're fucked. So they can't. The U.S. makes it out on the other end because the dollar milkshake. Did I explain that earlier? I feel like it didn't. Yeah. So essentially, there's been sustained dollar demand while GDPs of major economies have faltered. It has gotten so bad in Europe and Japan that even though these governments will straight up buy stocks and make attempts to force banks to lend, there is still no growth in their economies, nor even their money supplies. There is so much debt, and much of it is dollar denominated, that many of these economies will stay stuck in low inflation while debt grows. In the case of Japan, it's been deflation or zero inflation a lot of the time, or they get like 0.1% inflation month over month. The U.S. will adversely benefit from this because as foreign nations and unions falter, national unions, they will still be in the clear, or I guess international unions. They will still be in the clear financially as they are the ultimate source of liquidity, the U.S., and will soak it in as dollars flow back to the U.S. This is the crux of Brent Johnson's dollar milkshake theory and why he thinks the U.S. will drink everybody else's proverbial financial milkshakes until it gets so bad that the system has to be cleared and a new financial macroeconomic paradigm is settled. So, yeah, I don't think I read that earlier. But that's essentially it. Nice. Thank you. I love seeing Nouvelle, man. So essentially, I think Brent Johnson is right. I think the U.S. will make it out on the other end simply because we're the source of liquidity. If other nations need money, we have it, and they need our money. So there will be, no matter what, leverage with the U.S. And in my opinion, I think what does that mean? Why can't everything be at 90 degrees? What was I saying? Oh yeah. So if you have a situation where there's too much debt, yeah, the U.S. So the U.S. is the source of liquidity. So you'll end up having like a Bretton Woods 2, or you'll end up having some kind of situation to even out the problem. But I don't see that happening because there isn't GDPs aren't going up. Like there isn't wealth being created. There's just more debt being created. So there's no way you can just like get rid of it or lower the dollar artificially and somehow it doesn't cancel out all the demand that the organic dollar denominated demand that exists, the dollar demand for the dollar-denominated debt. So, the U.S. will make it out on the other end okay. It's just when the dollar is gone, what happens, and that's what I don't know, which is why it's probably going to take a while. It's probably going to take decades, maybe a couple decades. But it's a slow descent, you know. Anyway, I think that's a stream. Lol. So yeah, so that was the Eurodollar show. Yay. I hope I was able to shine some, give some knowledge about how money works to people, and why to not, you need to second guess yourself when you think like, oh, US is just totally fucked and everything's falling apart, and they're just gonna print a bunch of money, bro. Like, bro, where's the money? Gas prices will fall. They already are. Inflation will start to fall this year. I think it's already starting to flatten out. I don't know how long that would take. Probably not long at all, honestly. When people are just not buying, spending their money like they used to, when that demand has that pent up, that pent up demand they were talking about, right? When that's gone, and we start going back to these really depressing financial numbers, I think it's going to be pretty clear. Like, yeah, or these economic numbers. I think inflation will start to fall. People are going to start pulling their money out of stocks. I think it's pretty clear. There's you don't have to ask me. We are in a bear market, and we're in a bear stock market. So it's like, buy your shorts if you want to. Buy your puts. Housing prices will start to fall back to earth, at least to some extent. Maybe not pre 2019. They started really getting high, but it'll be pretty low. So I would say now is a good time to start looking at houses, because you'll be able to underbid people. All you got to do is look at Texas. There's a lot of good deals here. Like, people are cutting their housing prices by like $20,000. So I think the market knows people know where the market's headed. So the real question is, does the government print money? And I say no, they don't, because that's fucking retarded, and it will never happen. Maybe they'll send out a couple stimulus checks. Ooh, oh, I got $1,000. Oh, great. I'll save 900 of it and use it to, I don't know, the other bit to either go towards gas if gas is still expensive, or pizza or something. Like, cool. Like, you're not in for what you think you are if you're an inflationist, and you should probably stop watching Peter Schiff and a lot of these people who are sounding the alarm. Anyway, thank you, Minoan. It's always lovely to see you, man. Very nice of you. Ardent Party, nice for you to stick with us here. Everybody else, hopefully, La Nouvelle Réaction has a good time watching later. It was nice to see Cyberpunk enter Internal Affairs again. Good old Hunger. Hunger's a real homie. Focron, hopefully you enjoy. Anyway, yeah, Schiff is a butt white. Thanks for the short-term white pill, Ouros. Oh, for sure. I don't think there's ever a reason to be black-pilled, honestly. Go out and start creating value, start making friends, start loving, spread the love.